Hey there, iguanas. Iggy here, your guide to the wild world of investing. Today, we're diving into a hot topic that could have huge implications for your portfolio, the 2024 U.S. presidential election. Now, I know what you're thinking. Iggy, what does an election in the U.S. have to do with my investments in Singapore? Well, my scaly friends, that's exactly what we're going to explore in this video. I'll break down how a potential Trump victory in 2024 could be a major boost for the Singapore stock market. We'll look at which sectors and stocks could benefit the most and why Singapore is uniquely positioned to thrive under a second Trump term. But here's the real question. How can you profit from this potential political shift? Don't worry, I've got you covered. I'll share my top stock picks and strategies to ride this wave, whether you're a seasoned investor or just starting to build your nest egg. So grab a notepad, get cozy, and let's dive in. Trust me, you won't want to miss this one. The Straits Times Index, our trusty market barometer, has been on an absolute tear lately, skyrocketing over 4% in July alone to reach a staggering 6-year high. That's right, we're even putting the mighty S&P 500 to shame. And get this, year to date, the STI has climbed over 7%. Talk about a wild ride. But what's really fueling this raging bull run? Well, a few key players are leading the charge. First up, we've got the big three local banks, DBS, UOB, and OCBC. These powerhouses have been smashing records left and right, and considering they make up almost half of the STI, their performance is a massive deal. Investors are betting big that their mouth-watering 5% dividend yields will keep on flowing, even if interest rates take a dip. But it's not just the banks basking in the glory. The rising tide is lifting all sorts of boats. Blue-chip darling Singtel has soared to heights unseen in over a year. REITs, which took a beating during the sky-high interest rate days, are bouncing back with a vengeance. And let's not forget the offshore and marine stocks like Bangkwang Marine and Mermaid Maritime. They've been absolutely crushing it. The tide of money in the Singapore stock market is shifting in intriguing ways. After a challenging first half of the year that saw significant outflows, the past few weeks have brought a much-needed surge of inflows. In fact, a whopping 1/3 of the earlier outflows have already been reversed. This renewed investor interest is evident not just in the flow of funds, but also in the pickup in trading volumes. Interestingly, retail investors have been particularly active, pouring in a staggering $1 billion net into Singapore stocks in just the first 6 weeks of 2024. In contrast, institutional investors have been net sellers over the same period, though the pace of outflows has moderated compared to last year. This divergence suggests retail investors are sensing value opportunities and betting on a market rebound, while institutions remain cautious. Another key factor that could further boost Singapore stocks, especially REITs and property players, is the increasing likelihood of the U.S. Federal Reserve cutting interest rates. Many experts now expect the Fed to start lowering rates as early as September, with their own projections pointing to 3 potential rate cuts in 2024. This would be a welcome relief for REITs and property stocks, which had taken a beating in the rising rate environment of the past 2 years. Lower borrowing costs could improve their profitability and make their yields more attractive, potentially triggering a rally in these sectors. Of course, the exact timing and magnitude of Fed rate cuts remains uncertain and dependent on incoming economic data. However, if this scenario plays out, it could be a game changer for the Singapore market. The combination of improving fund flows, especially from retail investors, and a more accommodative monetary policy could provide a powerful tailwind for stocks. As always, though, investors should remain disciplined and diversified in their approach, rather than trying to time short-term market movements. The key is to stay focused on fundamentals and invest in quality companies with strong long-term prospects, while being prepared for potential volatility along the way. First off, let's address the elephant in the room. A second Trump term would likely reignite trade tensions with China. That's bad news for Singapore, as an open economy heavily reliant on global trade. But it's not all doom and gloom. In fact, some sectors here could actually benefit from the Donald's return to the White House. The top three I'm watching are banks, defense, and oil and gas. DBS, OCBC, UOB, the big three Singapore banks could be surprise winners. They have strong franchises in ASEAN, which may gain from supply chains shifting away from China. Their USD funding and wealth management arms are well positioned to capture flows from investors seeking a safe haven. Potential Fed rate cuts would boost their margins and loan growth. With dividend yields around 5%, the banks look mighty attractive in this scenario. If Trump 2.0 means more defense spending and America First policies, that's great news for ST Engineering. 40% of their assets are already in the U.S., so they are primed to benefit from any increase in U.S. military budgets or onshoring of manufacturing. Keep an eye on this one. Trump has never been shy about his love for fossil fuels. His plans to roll back green energy regulations and approve more drilling could be a boon for Singapore's oil and gas plays. Yes, this may delay the energy transition, but pragmatic investors need to position for the reality of a Trump win, even if his policies aren't great for the planet. Now there are also a few sectors I'd be cautious on, namely REITs and manufacturing. REITs with exposure to China could get caught in the crossfire of rising tensions. Same goes for manufacturers with facilities in China like Aztec. The bottom line? A Trump win would be a major curveball for markets. But nimble investors can still find pockets of opportunity by focusing on the sectors most likely to benefit from his unique brand of populist politics. As always, do your own research and stay diversified. In my opinion, the current rally in the Singapore stock market looks like it has staying power, particularly for stocks that pay out attractive dividends. The big local banks, DBS, OCBC, and UOB, are prime beneficiaries as potential U.S. interest rate cuts make their juicy 5% dividend yields even more appealing. REITs, which had struggled in the rising rate environment, are also back in vogue as lower rates reduce their borrowing costs and make their distributions more attractive. Even blue-chip names like Singtel are catching a bid. However, while there are certainly opportunities to profit from this rally, it's crucial for investors to do their due diligence and think long-term. Don't get caught up chasing the flavor of the week. Look for quality companies with strong fundamentals and sustainable dividends that can compound your wealth over time. If you have a CPF investment account or SRS funds, this could be a great chance to deploy some of that cash and juice your returns. But as always, stay diversified and don't put all your eggs in one basket. The key takeaway is that after years in the doldrums, the Singapore market is finally waking up and rewarding patient investors. If this momentum continues, it could go a long way in helping Singaporeans grow their hard-earned savings and reach their financial goals. All right, Iguanas, we covered a lot of ground today. Let's recap the key takeaways. First, a Trump victory in 2024 could be a game-changer for Singapore stocks. We could see wealth and supply chains shifting to Southeast Asia, benefiting our local banks and industrial players. Second, dividend stocks like DBS, Singtel, and REITs are looking mighty attractive right now. They offer juicy yields and could get a boost from lower interest rates. Finally, while the market is hot, it's always important to do your homework and invest for the long run. Don't just chase the flavor of the week. If you found this video helpful, smash that like button and subscribe to join the Iguana gang. I put out new videos every week to help you navigate the markets and reach your financial goals. And I want to hear from you. What do you think about the 2024 election and its impact on Singapore stocks? Leave a comment below and let's start a discussion. Remember, investing is a journey, and I'm here to guide you every step of the way. Together, we'll build a portfolio that weathers any storm and helps you achieve true financial freedom. Until next time, stay sharp, stay invested, and always keep learning. Iggy out!